Welcome back, Alpha Hunters. Okay, so in this week's episode of Your Stock, My Plan, I got one for you, UNP, Union Pacific Corporation. So I'm going to use this stock. I'm going to try and come up with the best plan I can so that we can make money on it going forward. Okay, so as we already see, just looking here at the stock, I already have some lines on it, as this stock is something that I have been messing around with over the past couple months, trying to just come up with different plans and stuff like that. So I've just kind of been watching it. So I do like to start out though by looking at the long term. So let's go to a monthly chart and see what the long term perspective kind of looks like. And railroad stocks are very easygoing from a bottom left, top right trend. And you can take a lot of the thoughts that I'm going to share in this video, and you can also apply them to CSX, which is another railroad stock, and NSC, which is another railroad stock. So they should all pretty much look about the same. They might not look exactly the same, but it should be pretty similar. So what we can see is UNP very much gets into bullish trends, and then bad or down bearish economic times, it just has a pullback. And then it sets in another bullish trend and then has a bearish kind of pullback during some economic time issues. And then you set in another bullish trend. So you get these longer term bullish trends, but you do get these pullbacks. And then what you also notice is the bullish trends, man, they look like they go up at the same rate. It doesn't matter when the bullish trend is, it looks like the same rate, no matter, just depending upon the time period. The only time it loses in between is the bearish pullbacks. Just in knowing that kind of helps us understand the pace at which railroad stocks should go up, kind of going forward in the future. And they are a very rateable business. They don't really fluctuate their rates too wildly. They are going to charge you based on inflation and certain, costs. So that's why you don't see much changes in basically the rate at which they increase over the longer term. So let's figure out then what we can do for making money on UNP. So I will go ahead and just take that out, but I do have some shorter term lines over here we'll adjust. So come over to this weekly chart and really we can draw this line through here. That might be the trend it's on or something like that. And then, but we do have, I'm going to leave this line down here for now, right? Because this line seems like it is a good support line for the stock. Somewhere like right there. We're kind of at this low period. It bounced there. It hit there again. Hit on that line again. So it seems like there's some kind of good support line going up at that kind of rate. So anything, I would definitely say anything bullish under this line would be good. And then the cool thing is, since we kind of know the stock tends to go up at a particular rate, right? If we go back to a monthly chart, it goes up at a kind of an easy going rate. We can definitely say, all right, we want to just look and see like maybe what the upper range is. So maybe something from this area to that area or something like that. So it goes very much in an upward trajectory and just fluctuates inside this upward trajectory, right? Until it breaks out of it to the upside or downside. Most likely it will break out of it to the downside. If you did notice, in the longer term in the monthly chart, like it doesn't really get above this rate of climb, right? It doesn't really get above that rate of climb. Every now and then though, it will pull back through the rate on the downside, right? So if we channeled it here, so that was the channel it kind of went up in and it broke through down in the future, right? So that's the line that we kind of need to watch. Is the line on bottom, the supporting trend line. Okay, so if this is the kind of channel it's operating in from this pullback it had back in 2020 from the COVID crash, this is the channel it's operating in. So this is the constraints that we kind of just need to develop our plan. And maybe right now it's at the higher end of the channel. So you would just want to look and see, I'll just take off this one that I was messing around with earlier. We'll just want to look and see what possible scenarios we can get into in which we can maximize our profits, okay? If the stock is currently in the upper parts of the channel, what we can look to do is actually go and look to do bearish positions above this trend line. And then as it comes down closer to this lower trend line, we can do bullish positions below this trend line, okay? But what you need to know on any of these stocks, right? Once they break their trend, then that's it and they're done. You need to either find a new trend line or maybe a new channel, that kind of thing. But this is where breaking either one of these lines is just a cautionary tale, as it can continue to break through further to the downside like it did back over here. So what we will do is look at the options now. And the cool thing about UNP and their options, I want you to leave a stock in the comments below and I'll come up with a trading plan, is they do have weeklies. Now, not all stocks have options on weeklies, but UNP does. It's a pretty big stock. It trades quite a bit of shares. Let me just go and look at how many daily shares it goes through. About 3 million. You can see that on the number right here, about 3.5 million daily. And really it's that blue number, that's the 10-day average. So it's about 3.5 million. So it should be plenty good, whether if you want to trade this on stocks or you want to trade this on option. Anytime it gets down here and lower in the channel, you want to look to go long. Anytime it gets to that upper trend line, you would want to probably either just sell, not be as bullish, that kind of thing. And you maybe even sell some calls, like cover calls or bearish call verticals, bearish put verticals, that kind of thing. So, okay, let's look at options and see really where we are. Now, this is a pretty wide-ranging channel, and I would say we're a little bit on the upper half of it, barely. I mean, we're kind of close to the halfway point from up here to down here. So we're kind of in the middle. And we can actually even look a little bit narrower in time and say that we have a trend somewhere like right in here, right? Somewhere like right along in there, to where that's almost like the middle part of the longer term trend that's currently in. And we could definitely say that something like that, where it's bouncing in the upper half of the longer term trend here on the short term, okay? So if you wanted to play this on the short term, on a daily type time frame, what you can definitely do is come in here and look to play weekly options for the next week. And you could do some bullish stuff down here, and you can do some bearish stuff up here. So let's go and look at what probably would be a safer bet, is probably doing bearish stuff up above this high right here, which was set back in January 7th. So we'll look and see if we can do some bearish plays at like 255 or 256 area and see what we can grab. So 255, see if we can buy a vertical here. So we can buy a vertical maybe for about 233. Our max reward would be 250. So maybe not so much there. Let's see if we can sell. So that'd be our max win would be like 17 cents. So if we sold a vertical here, max win would be 9 cents. So if you're gonna do a bearish position, I would definitely do these bearish put verticals. So you want to buy these put verticals, 230. Oh, hold on, wrong ones. Let me reset that. Verticals, okay, so 233, probably get in for like 235 or something like that. So you'd only make about 15 cents out of the 250 total value of the spread. Maybe not the best risk reward, but it is still roughly. So if you can get in for 235, right? So if the total value of that spread is 250, and we minus how much we would potentially get in for, so we paid 235 to get into that vertical. Most we could collect is 15 cents. So we'll take that 15 cents, we will divide it by how much we're risking of 237. That would be a weekly return of 6%. And then if we times that by 52, we would have a 332% annualized rate of return. That is pretty good, not bad, but let's see if we can do a little bit better. So that would be one way we can do this. The other way is we can do a bullish setup potentially down here, okay? Now the other thing is they do have earnings coming up in mid-May, or mid-April, April 21st. So you'd have to watch out for that when you get out to that time period. Then you also have dividends coming on February 25th. So you can expect the stock to potentially gap down a little bit from cash payouts of dividends. They're going to be paying a dividend of $1.18. So that is something to also be aware of. But what I would like to do is maybe even do an iron condor on this kind of stock, to where we have a bearish position on top. So I think we can do a bearish position with the 257.50 by 255 puts. We can buy that. But let's look and see where down below we could probably, I would definitely say we would want to be under this low back over here. That way give us a little bit of space, because we are kind of close to this trend line. That way if it breaks through, that maybe we just close that position, which might not be a bad thing. Maybe take a little bit of a loss on it. I think the main part of doing this kind of play is waiting for it to kind of come down to this longer term trend line and looking for the bounce down here. But that would be one thing I would look to do, though, is once it got down to this kind of, let me go back out to a weekly, that way you can see it. So this is where that longer term support line is. If it got down to this level, I would actually look to go long through some verticals, through some call verticals, or owning the stock, owning the calls outright, you know, but just make sure you're going out far enough in time to where it's not going to, the way theta is not going to hurt you. Okay. So that's what I would be looking for, really. But I'd say here on the weekly, we can definitely play this a little bit bullish here, as it doesn't really have earnings coming up. And I think we can get in probably around that 230-250 level, right? Because it has option intervals every 250. So let's see if we sell put vertical. We could collect about 20 cents there. And then if we bought by vertical here, we would be paying more than you'd be paying more than the actual vertical itself. So the vertical is $2.50, and this has it priced at $2.80. So I can already tell you there was a pricing anomaly here, and this is just off of experience, but there is a pricing anomaly between one of these two, to where either this is priced really low or this is priced really high. And it looks like this 230 is priced really low. So the way that we can kind of take advantage of that, if it's priced really low, it just really has a really wide bid-ask spread here. Let's see if we can maybe buy this vertical. So that's 220. That's a little bit better than the 20 cents we were going to make over on the put side. And the puts were actually closer. So we can actually look to buy this farther down call vertical. So like that put vertical is going to be like right here before we potentially could start losing money. That call vertical is down here. It's about another 2.5 points further down. So that could be very interesting, as it'll allow us a little bit more room, and we can make a little bit more money as well, because the spread is still 250, but we'd be paying 220. So our max reward in that case would be 30 cents. But if we sold the put vertical on the other side, we'd only be getting 20 cents, and our max risk in that scenario would be 230. So I definitely do like the situation of potentially going a little bit further down to this 227.50 strike here and buying a vertical there and paying 220, having a max risk here of 220, collecting potentially a max reward of 30 cents. So we could potentially say 250 is our vertical max value. And then we could potentially get into this trade for 220. Okay, so that would give us a 30 cents max reward. And then if we take 30 cents and divide that by 220, that would be a roughly 13.5% reward in a week. And if we annualize that by times it by 52, that'd be roughly a 710% reward for annualized. So that's really good. If we combine the two, what was it? If we combine the two, 710 plus 330. So if we take that plus 330, that would be a 1,040% annualized gain. So really good if we did the Iron Condor this way, and not bad to be on a short term. I don't think there's much to worry about because we'd be under this upward trend line, this pivot, and this pivot. I think would be okay. And it's also a railroad company, which is one reason why I'm trying to show off these kinds of stocks. It's because they're super, super safe. Here is another strategy I think that might be worthwhile for you to look at is just doing put sales, okay? Just doing cash secured puts. If you have the capital required to do this, is what you would do is sell a put below the current stock price and collect the put premium, kind of like you would collect dividends. Now, here's the cool thing is doing this on stocks like railroad stocks or stocks that really have no problem in coming back. If they don't crash 75 to 95%, like we have seen with other tech stocks out there, and a lot of other YouTubers are touting those and speaking on behalf of a lot of these other stocks out there. Go with something safe, especially right now in our current market environment. A lot of things are just really, really shaky. I've just been falling a lot. So if you do this kind of strategy, and I haven't really covered the wheel on my channel, but you could do what's called the wheel, and this could be a great stock to do it, because even if Union Pacific winds up falling, right, on the short term, I have no worries that it will come back up over the course of maybe 2 years, right? You know, the financial collapse 2 years later, it was back at all-time highs. In 2015, 2 years later, it was back at 2.5 years later, it was back at all-time highs. So, in all that time, they pay great dividends. So, at least you're collecting dividends, you're collecting that cash flow, and you can be selling calls up above it as well to collect more cash. So, railroads, they do not crash like high-flying growth stocks, okay? So, if you did do like the wheel type strategy or something like that, you definitely want to give yourself a little bit of room on the bottom side on selling the puts. You might have to go out on a little bit of time. So definitely look for like good support levels, maybe like here, yeah, around that 232.50 or so for the week. You can collect 80 cents, 70 cents, something like that. Might not be bad. And then you could do that like every week, you know, just every week you can just keep doing that. And you could potentially even go out farther in time. It depends, you know, how much time you have. Can you monitor this every week, or is it every other week? And you just go 2 weeks out? If you go 2 weeks out, maybe just go a little bit lower. You might collect a little bit less. Your annualized rate of return might be a little bit less, but it's fine. It'd be a little bit safer, because when I do a lot of these type of trades on the wheel and selling cash secured puts, I'm not so much looking to actually do the wheel, okay? And that is where I differentiate between a lot of other people on YouTube and their, you know, what they teach on their channels. They can teach however they want. I don't teach the wheel to do that on high-flying growth stocks. That, to me, is wrong, okay? Because it can have exponential growth to the upside, but it can have a massive crash to the downside. And that's not what I'm trying to do when I do the wheel. I'm trying to be into a predictable, safe company to where I know if I do wind up getting the shares, I don't have to worry about 10 years later or more for the stock to come back. I'm, 2 years later, okay, I'll collect dividends. I'll throw on some covered calls up above it, collect a little bit more cash flow. But this is what I would recommend you doing, is maybe even just doing some cash secured puts, just collecting a little bit of cash flow. Yeah, I mean, just bringing that cash flow, you kind of increase your account slowly, but you need to make sure that you have enough capital on hand. And what you want to do is pick the strike that you want, right? Pick the strike that you want. And let's say we'll go 2 weeks out at the 230 strike. This looks pretty good. So we'll take 230, right? So we're going to sell the 230 strike, okay? And when you sell a cash secured put, you need to have the capital as collateral in your account. This is why it's called a cash secured put, to be able to buy the shares at the strike that you are selling the put. Because since you are selling the put, you are obligating yourself to buy the shares at the strike you are selling. So in this case, we're selling the 230 strike put, so we are obligated to take on the shares from the put. And then remember, always times it by 100, because we would be taking on 100 shares. Okay, so each options contract is 100 shares. So this would be roughly $23,000. So I hope I showed off a couple different ways for you. If you do have the capital for a $23,000 account, that's great. This is an option. Selling cash secured puts and potentially doing the wheel strategy is an option for you. If this is not an option for you, you don't have that kind of capital in your account, what you can definitely do is what I showed off earlier with doing the verticals. You can buy the 257.50 by 255 put vertical for roughly 235 or so. So you could probably get in, and then your max reward there would be 15 cents. I would take that all the way to expiration if you can. If it starts to really break to the upside, probably won't break to the upside. You'd probably be fine there. The one you'd probably more have to watch would be the downside. And I think we narrowed down this 227.50 by 230 call vertical right here. So that is a good situation right there. You can get in for probably 220, maybe 225, and have no problems in collecting 25 cents to 30 cents on premium. So, and this would be an iron Condor, as we would be looking to buy down here, sell there for a $5 win, as we have a 250 below with the calls and we have a 250 above with the puts. So it'd be a $5 total, but we would be looking to get into the trade for $4.53. So potential win for about 45 cents or so, 45 to 50 cents. So you can say 40 cents to 50 cents if you want to be a little conservative. So that's not bad. Over the course of a week, potentially a 10% gain. Pretty simple, pretty easy. And then, you can do it again the following week and the following week and the following week. You just want to make sure you don't use the same strikes. You just want to re-examine, see where then the stock is at, reposition as need be. So if it breaks through a little bit here, maybe you want to hold off on doing anything bullish down here, because it might just keep coming down. But if it keeps coming up, you could probably do the bullish stuff easy, but maybe you want to hold off on doing the bearish stuff that's up top, as it could start to get up to this upper area. So you just want to let it kind of work its way within its own longer term zone, and don't try to force any kind of trade on. So like, for example, like if it came down to this right here and you were looking to put on another trade, it might be one of those. It's like, you know what, I'm gonna wait. I'll do the bearish up here. I'll collect a little bit less this week, and then you just kind of see what happens, because maybe this instance it just crashes through, but it didn't. It bounced and held pretty good. So it's just one of those things you need to re-examine when your options expire, that kind of thing, or it breaks the trend. You want to just close out. Hey, you know what? I don't want to risk my full 230. I'll close it out for maybe 210, whatever that vertical would be worth. Take a little bit of a loss, re-examine, let it set up again. Maybe it just comes all the way down here and then bounces. But this is why I do like putting them both on, because if it does break through one way, I'll take a little bit of a loss on that side. I'll leave the other side on to get that reward, and it kind of compensates my loss that I take on the other side. But this is kind of a very trend strategy to do, the iron Condor, and as long as you just kind of know the trend, well, then you know where to set them up. Okay, but doing the cash secure put, if you do have the capital, highly recommend doing it on these kinds of stocks, railroad stocks. Really good, highly recommend it. If you did like this breakdown on UNP and the options and kind of walking through where you want to put certain order types, give this video a like. That way it helps the video spread to more people. But I do appreciate you checking this out. Hopefully you did learn something already. Take care, Alpha Hunters.